let's jump right in and hit that question that is on everybody's mind. Is the real estate market going to crash? And if so, is it going to be soon? And let's lead off with the man who obviously looks like he has the most technical knowledge right here, Phil Stevenson, the mortgage nerd.
Thank you very much, Will. It's an honor to be on this panel. And yeah, that's something that we keep hearing everywhere is, oh man, when is the market going to crash? It's going to crash. I've had clients not buy because they're anticipating the market to crash, but I have videos from 2019 saying that it's not going to crash. It's not going to be like 2008. So even before the pandemic, I was talking about this. One of the big reasons that people don't understand how many factors go into a market crash and what's happening right now with the values going up. One of the factors that's amazing to me, it's actually pretty staggering when I learned is, I'll just give you a tidbit first. When the market crashed in 2008, Roe versus Wade had an effect on that. Like, wait, what? 1972, I think it was, court ruling on abortions had an effect on it. So here, I'm going to share my screen and show you what I'm talking about. So over here, 1957, it's the peak of the baby boomers being born. Then contraception was here, late 60s, about 1970, and then Roe versus Wade was down here. So when Roe versus Wade came out, we had the lowest population, lowest of birth rates, new births. So the average homeowner, the time home buyer, is at age 33. I always like to say between 30 and 35. So you add 30 to 35 years to this section right here, and you have all the years of the market crash, 2007, 2008, 2009, 2010. So while it wasn't the factor, these gentlemen are going to talk about a bunch of other factors, this was huge. But how does this translate into what we're going through now? Well, the largest portion of our population right now are millennials. Millennials are in the first-time homebuyer range. The bulk of them are between that 30 to 35 years old. So 1990 was the highest point of birth rates since the baby boomers in the 50s. And you add 33 years to this, and it's 2023. We're not even there yet. We're not even at the peak of the first-time home buyers wanting to buy their homes. Of course, people say to me, oh, well, millennials, and they can't afford these properties, but everyone here on this panel and other people, even insurance agents, an insurance agent friend of ours said, that's crazy. Of course, millennials are buying. I've got 30-something-year-olds, low 30s, buying $1 million homes and complaining about their $25,000 a year homeowners insurance in South Florida. So it's happening. Maybe a lot aren't going to qualify, but the demand is what's driving this, and not just the demand, but the low inventory. So I'm going to change to one other screen before we.
Phil, I just want to ask you a question, real quick question, right? So with the birth rates, so when you mentioned, right, we still haven't seen the peak of the demand. That's because at or about 1990, that's when we saw the peak of birth rates. So what, 2023, right? 33 years old, that's the average age. That's what you're referring to, right? We're right there. We're not even at the peak of the demand yet.
Correct. We're right in the mix of this high demand for first-time home buyers. And if you follow the 33 year exactly, 33 years will be 2023 from that 1990 peak. And then, as you can see, if you saw on that chart, then it starts to decline a little bit over the coming years. So maybe in 5 years, where if there's the right mix of different scenarios, values are too high, rates are high, a recession, then maybe we'll see a crash at that point or a correction, but it's too high. And right here on this chart, let's look at inventory. This squiggly line back here, this is inventory. So right now, 2022, we're at 900,000 homes for sale. Let's look at 2008, at the peak of home inventory. It was 3.7 million in this 2007, 2008 range. So we have a quarter, 25% of the inventory currently than we had when the market crashed. But more importantly, let's talk about the population that I was saying. So that's the supply side. The demand, this line right here, is the US population in millions. So if we look at 2005, right here at probably the peak, 2005, 2006 of the real estate boom, inventory was rising, less people were buying, there was more people selling and they couldn't sell. And then the population was much lower than it is now.
So to kind of just put some perspective on that, Phil, like we can look at that chart there and the green kind of smooth line being the demand. Whenever that blue line is above that green line, that's going to have a suppressing effect on prices. You know, there's more supply than there is demand for housing. But
Yes.
now we're in not even just a correction of that. I mean, it is a huge gap in the point now where the supply is so low, but yet we have these population effects of people being born now, turning 33, coming into that age. And so there's no artificial demand being created here. It is just natural supply and demand, basic fundamental, freshman year economics.
Yeah, rising. And back then rates were lower than mortgages. Now the rental rates are higher than the mortgage payments, so you can sustain it. You don't have to, you're not like upside down $500 a month, so you just let the house go to foreclosure. Foreclosures are their lowest in history right now. And my last stat is that in 2006, income from 2006 to now, I only heard this in the last week or two, has gone up 55%. Household income has gone up 55% since 2006. People might think that's crazy. Teachers, nurses, they don't make more money. Yeah, maybe they make 5-10% more, but there are other professions that are making 100% more. So the average is 55% that's gone up. So I don't see this stopping. And I think kind of unfortunately, I think we need this to slow down. We need more inventory. We need a balanced market. It's always better when you're balanced.